Gold just smashed our $4,000 target. Is it the time to sell? Or is the real opportunity just starting? If you want to trade this along with me, the link's in the description below. Let's dive into this. All right, let's take a quick look at this gold chart. So gold hit $4,000 an ounce on an intraday basis. So we were talking about this 4,000 target for over a month. It was a symmetrical measured move in terms of the upper target after a breakout out of a consolidation triangle. So the question now is, what's next for gold? Can gold just go parabolic through this level and just keep going? Or is the much anticipated correction going to come in? Now, when we say correction, it doesn't change our bullish view on gold in the bigger picture, but just like corrections that happened over here or many times in the past, gold just takes a break and gives back a little bit in a profit-taking cycle. If it was, where would it go and how deep would it go? I mean, you can see the 50-day moving average lies around 3,700 on the downside, and that leaves room, obviously, for as much as a peak to trough 300-point correction, which also is where a 50% retracement would also lie in the move. So that would be obviously a reasonable assumption that that if gold was to correct, that kind of a risk would be on the table. But really, the momentum has been so strong. The question really is like, what is it that could derail this? And that's the puzzle I want to solve. Now, before I talk about that point, I wanted to highlight silver at the exact same time as gold is finishing its measured move. So you can observe here, this projection was up to this $48, $49 level per ounce and a perfect fit completion. So you have a lot of the precious metals all kind of coming to a point at the same time. Now, this one of the things that we always want to highlight about precious metals in general is that they often are viewed as a currency, and the movement of the US dollar plays a big factor. The fact that the US dollar has been in a bear market all year has been a huge tailwind for gold and contributing to its upside. But something interesting has been happening with the dollar. First of all, the dollar has really stopped going down since it's more or less pivoted around its April lows, or let's call this the 98 level on the dollar index. After a double bottom, we've now seen it trade to the top end of its trade range. And this is the first time we're seeing it trading above its 50-day moving average since the fake out in July. So the puzzle to solve here is that, is the dollar pivoting? Well, we have to break down, where does the dollar index strength coming from? Well, first off, it's definitely coming from the recent move in the US dollar yen. Obviously, the surprise election results in Japan caused the yen to break down and the US dollar to rip against it on the upside. This is now breaking out of its multi-month trade range to the upside, giving that US dollar a kicker. In addition to that, the US dollar against the Canadian dollar continues to trade well above its 4 or 5 month ranges. And so we clearly can see some US dollar strength coming in there. But then look at the way that the pound sterling has been weak. It not only broke down below its 50-day moving average, retesting some of the lows from August, but the rally has been pretty pathetic. It bounced toward 135, rolling over. If we have a clear breakdown of the pound here below this 133 level, we could have a correction going to 130, 129. And of course, that euro, look at this, trying to again close below its 50-day moving average. It's been one of the most strongest trending currencies all year. Is this going to be where we see a correction? So you can see a lot of these cross currencies are all lined up for a potential dollar move. So the thing that I want to bring to everyone's attention, here we have gold and silver trading right at the end of measured moves at exhaustion points, and the US dollar setting up for what could potentially be a surprise squeeze. Now, this is the puzzle to solve. Is the dollar about to squeeze, and will it be the catalyst to drawing in some profit taking in gold. And more importantly, what should you do about it? Well, listen, if you're loaded up on gold, first of all, if you own it as a physical commodity and you just own some gold, there's nothing wrong with holding through a correction. But if you are highly leveraged in your gold positions, this is a prudent time to be doing options overlays, finding ways to reduce the volatility and blunt or hedge the downside risk of a correction to give you the staying power with your long-term convictions on gold. I'm not in any way looking to unload long-term gold positioning, but when this kind of a big rally happens this quickly, it's often a good time to lock it in, because usually volatility to the upside of this kind of magnitude usually is accompanied with volatility in the opposite direction of equal magnitude. So there could be some violent swings. Think back to uranium back last year, where uranium stocks, for instance, had 30% corrections on the downside. It didn't change the uranium bull market, but yet it still did it, and it squeezed a lot of investors out. I'm still super bullish gold in the big picture, but tighten up some sort of hedges in there, because this is a level where gold can get a little bit heavy.